Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is December 31st, 2012. Last day of the year, last trading video I'll be doing this year. So I guess this is the end of the year trading video. Um, a lot going on in this market though. I mean, typically this is a low volume day. You'll probably see it be a fairly low volume day. It'll be below average at least. Um, but you got all markets are closed tomorrow, and then everything reopens back again on Wednesday. But what's going to be interesting is that the fiscal cliff deadline hits after all the markets are closed. So that's going to be really interesting to see what kind of impact we see on Wednesday when the market opens back up again. Um, Obviously, there's not going to get it. It's very unlikely, in my opinion, that there's a deal that gets done. Even if Boehner, Harry Reid, Nancy Pelosi, Barack Obama, Mitch McConnell, and everybody, this little, fabulous five. I wouldn't, not literally a fabulous five, probably the idiot five, but let's say they all come together and they strike some deal. It's probably not going to get past the House. Okay, if the Plan B couldn't get past the House, unless this deal is just loaded with spending cuts, it's not going to make it. So, unless we see some kind of brazen executive order, I would say that we're going off the fiscal cliff tonight. Now, I could very well be wrong on this, but my background is actually in politics, and I've spent a lot of years on Capitol Hill, so I got a good idea for how the whole system works and everything like that. But don't be surprised if we go straight off this cliff tonight, because I just don't think that there's the votes in the House chamber for any kind of bill that's not loaded with spending cuts and no new tax increases for it to be able to get through the House. My opinion, that's a good thing. Some of you might think otherwise, but the S&P, though, we had some strange market action basically because of the breakdowns and talks after hours when the market closed. I mean, we were just tanking like 140 points, I think it was, or 100 points on the Dow and 12 points on the S&P after hours on a Friday afternoon, which is very rare that you see that. So that was why you saw the futures up so much, but yet the S&P itself is not really up that much because the fair value was skewed going into the open. One thing to note, we are down, not counting today's 5 straight days. Still could very easily make that a 6th straight day. In the last hour of trading, you may see some finicky action out of the markets as people try to position themselves for the end of the year. If these dividend taxes go up, you could see people start selling some positions in the close. I would think that most people that want to make sure that they sell their positions are going to have already done it prior to today. But nonetheless, with light volume, you could get some big sellers that are cashing out at the last second. So don't be surprised by anything that you see. 5 straight days, looking today to finally break that streak. Notice where it's coming in at is at the lower Bollinger Band. Oftentimes when we test it, though, and I wouldn't say it was a definite test of the lower Bollinger Band, but it's about as close as you can get without testing it. So, but in the past, when we tested it, you could see it doesn't bounce right away. In fact, it typically leads to about 3 to 4 more days of solid trading. The only time where it didn't do that in the in recent memory was back in September here on September 4th, where we tested it and then just rocketed higher. But you can see here, 9 times out of 10, we test it and we continue to push lower before finally get that bounce. Another exception to that was on March 6th of 2012. So, but you can see here, over in here, you got it here again where we tested it. And then again, back in November, just recently, where we just kept popping off of that lower Bollinger Band. So, we're testing it today, but I don't think that necessarily means just because we're testing it that we're going to go straight back up to 1440 or 1450. It wouldn't really surprise me if we trended a little bit lower here in the near term still. We got the 200-day moving average. That doesn't really, seem significant to me at all. Some people will say, oh, the S&P's below the or below the 200-day moving average, and therefore the market must be bullish, or bearish. But I really don't. I really don't put much consideration 200-day moving average, because I mean, just look at the past. I mean, does it really look like it bounces off of it at all here and here? Not really. So if it hasn't paid much mind to it in recent past, I'm not going to pay much mind to it now. Prove me otherwise. That's always my saying. So, all right. So let's look at silver here. Oh, before I move on though, let me look at a couple more charts here on the time frames, at least on the S&P. First one being the 5-minute chart. You can see we've been consolidating for most of today. It's pretty quiet, which is typical on the last day of a trading year, minus that final hour of trading, which can sometimes get hectic. So, but if you're looking at it from a longer term, you can see that there is a very solid trend line going down. Let's remove these Bollinger Bands for now. You can see consecutive higher highs, or I'm sorry, lower highs and lower lows. So lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So what do we got to do to break this on the 5-minute chart? Well, we need to probably close around 1421 or better. That will create a higher high in the market, and then when we do ultimately pull back again, we need to do it without breaking below 1398. So that's how you break this downtrend on the 5-minute chart, which is more conducive to day traders. On the 30-minute chart, you got similar price action with the higher high, or the lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high, etc., etc. So 50-day moving average has been trending this thing really nicely, so I would think that that would be the first step for the bulls to recovering this market. You have some possibility to that being a double bottom formation being created, but ultimately this thing, like we did set on the 5-minute, needs to get back above 1421. So 5-minute, 30-minute charts are showing the same thing. The weekly charts, you can see here, we ran a couple weeks ago slap dab into resistance here overhead, so that's what we're looking at there. Chart looks bearish to me on the weekly. Doesn't mean that you can't trade bullish from a daily chart, but we're not getting that right now off of the daily either. But where things will start really hitting the fan with this market is if we get a close below the November lows. So below 1343, I think the selling is really going to pick up in this market. My stance in this market going into the new year is leaning slightly bearish. Okay, so what that means is come the new year, when I start building up my portfolio, because right now I'm not in any positions, due primarily to that whole fiscal cliff and the uncertainty that it presents and the edge that it takes away in my trading. But once that passes and everything, I'm going to start looking at maybe having like a 3 short, 2 long portfolio, or a 4 short, 2 long portfolio in terms of positions. So I won't be all out bearish, but I will have a tilt to the bearish side with some long exposure to counter that. Let's look at the chart that was requested in this video, silver from a long-term standpoint. What I find a little bit intriguing is that you could have a inverse head and shoulders forming on this chart. So inverse head and shoulders, opposite of the head and shoulders pattern, except it's just sort of like flipped around to where you got a left shoulder here that forms a small bump, and then you have a big bump here that goes lower than the left shoulder, forming the head. And then you could say that was the right shoulder, but obviously that didn't happen. And typically the right shoulder lines up, from a textbook perspective, it'll line up with the left shoulder. So if it comes down to like the $28 level or so, 28.10, 28.15, and then starts moving back higher, you could say that that's the right shoulder that's being formed. And then a break above 34.25 or so would definitely accelerate the buying in silver. So we did have a downtrend, and this is off of the weekly chart. So looking at it from a daily chart, you can see it's probably not as clean, but we had this downtrend off of the May highs from last year that was broken back in September, but it really hasn't done nothing. It's just really been bleh. You have like a quasi double top scenario here that has unfolded, and a bearish flag that could be getting created here. But then when you look at the excuse me, the weekly chart, it sort of supports that move back down to perhaps $28 and change. So there should be about $4 or 4% of additional downside to the stock, maybe 3% of additional downside to this silver ETF before it bottoms out. So if I'm trading, I'm looking for this whole gap right here to get filled at 28. It would also line up nicely with this little base of support here that has been formed of late. So just draw a nice little circle. This is your base of support right here in silver. So I think this thing goes to 28 before it goes back into the 30s again. All right, that's going to do it for today. That's the last market video we'll do on the year. I'm wishing you guys all a very prosperous and year ahead outside of trading. And then when it comes to trading, I hope that you have the best year yet ahead of you, despite whatever conditions the market throws at us. We'll be judicious with managing our risks and be thankful with the profits that we're able to take away from the market on a daily basis. So long, and God bless you all.